Over the weekend, you might have heard the news that OPEC Plus is cutting 1 million barrels a day of oil output. That caused oil prices to jump up 6%, which is back to where they were before all the craziness in banking happened. And so if you look at, any of your financial sites or anything, you're going to see that oil stocks are just flying, right? Halliburton's up 7%, Marathon's up 9%, Macy's, not an oil stock, up 6%. Occidental Petroleum is up 4%, which I owned this thing and don't own it anymore. But I'm going to talk about today my favorite stock in the oil and gas industry, and I can pretty much guarantee you've never heard of it. So I'm going to get to it in just a second. If you've never watched this channel before, I do things a little bit differently here. I share my actual portfolio. Okay, I am building this portfolio. My goal is to build it up to $1 million, and I am a long-term investor. I've done some trading, but at my core, I'm a long-term investor, and I'm getting back to that. That's what this channel is about, right? And that's what I want to help spread. And I'm interested in building a $1 million portfolio over time, and I'm sharing the journey transparently. So here's my returns over the last quarter. We're up about $21,000. Year to date, we're up about $21,000, so almost 18%. And then all time, I started this portfolio on February 16th, 2022, down about $5,000. If you've been watching this channel, the portfolio was at about $150,000. And now you can see I'm down to 90,000. So what happened? Did I sell out of the market? Am I short? All this stuff? Actually, today I just sold $60,000 worth. Why? It's not because I'm worried about the market. It's because I am now going full time on my newsletter and on YouTube. And this portfolio is for the long term, right? Well, my business and myself is one of the best long-term investments I think I can make. And because I made this leap, I want to have some runway, and I've got financial responsibilities with a family and stuff like that. This $60,000 is to give myself some runway. And so it has nothing to do with my outlook on the markets, other than to say that I just don't want to have money invested that I might need in the next few years. And because I'm making this bet on myself, I want to have that cushion. That's what the difference there is in the value. Just wanted to share that transparently. All right. So today, I don't know even know what the market's doing, but we're down about 0.24%. Okay. So stock I'm talking about, and I want to be transparent. I own shares of this stock, CNX Resources Corp. Had you ever heard of it before this video? Let me know down in the comments. And if you have, what do you think about it? Anyways, we own 279 shares at about $15.88. It's about a $4,400 position. Oh, and the last thing I'll say about the portfolio, if you've been watching, is all of these position sizes have stayed the same. I just sold everything pretty much evenly. And if you want more details on my portfolio and position sizes, my email newsletter is the best way to get that. It's down linked in the description below. All right, let's get to CNX Resources and why I'm such a fan of this company. So first of all, let's talk about what they do. This is from, I believe it's their last 10K, their last annual report. Yep. Fiscal year 2022 10K. It's a premier independent natural gas and midstream company engaged in the exploration, development, production, and acquisition of natural gas properties in the Appalachian Basin. The majority of our operations are centered on unconventional shale formations, primarily in Marcellus Shale and Utica Shale in Pennsylvania, Ohio, and West Virginia. Additionally, we operate and develop coal bed methane properties in Virginia. We believe that our extensive held by production acreage position and development inventory, combined with our regional operating expertise, extensive data set from development and non-op participation wells, midstream infrastructure ownership, low-cost operations, and legacy surface acreage provide us with significant competitive advantage that position us for long-term value creation. Okay. What I really like about this company is their focus on capital allocation. I'm a big fan of Will Thorndike in a book called The Outsiders. It covers, I think it's 8 companies that significantly outperformed their peers in the S&P 500. I'm talking about like 25% annualized returns on average over a period of 20 plus years or something crazy like that. Just crushed the S&P 500 and their peers. And they did things different. And one of the things they did was for the most part, they didn't pay regular dividends, and they didn't do regular share repurchases where they just buy back a few percent here and there regularly on a set schedule. Instead, they really preferred to buy back shares when the management team thought shares were trading at a discount, and they would buy back a ton of shares at a time versus just a little bit here and there regularly, almost no matter what the stock price is. That's what I think CNX is doing. And Will Thorndike, who is actually a great investor, mostly in like private equity companies, but he's on the board of two public companies. He's on the board of CNX, and he's on the board of Perimeter Solutions. So I own Perimeter Solutions too. I'll talk about that in future emails and future videos. But for him to be on the board of this company speaks highly to me, and their capital allocation strategy is really interesting to me. So 3 years ago, this is their annual letter from 2022. CNX laid out a differentiated strategy that emphasized long-term value per share creation over short-termism and instant gratification. 2022 was another productive year of executing that strategy as we continued to efficiently develop our core asset, position the company for future growth opportunities, positively impact our local region, and not incidentally generate significant free cash flow per share. CNX enjoys 3 competitive moats that uniquely position us to execute our sustainable business model and generate substantial free cash flow per share year after year. Okay, and they talk about their acreage, their upstream and midstream businesses that create the lowest all-in operating cost structure in the Appalachian Basin. And then CNX's new technologies business segment, rooted in the company's extensive legacy, asset base, and tradition of innovation, has created unique opportunities in areas of methane capture and abatement, transportation fuel, market development, and technology deployment. These growth opportunities position CNX well as the world focuses on lower emissions and lower risk energy solutions. Okay, so this is what I really like about it. So the competitive moats above are drivers of consistent free cash flow generation. When coupled with our capital allocation philosophy of clinically selecting projects with the best risk-adjusted rates of return, we're able to deliver substantial intrinsic value creation per share for our owners year after year. All right, this is where it gets crazy. In 2022, the company generated $1.2 billion of net cash provided by operating activities, which resulted in an annual record free cash flow of $707 million. As of January 17th, 2023, our total shares outstanding were 170 million shares. If you divide 707 million by the 170 million shares, the resultant free cash flow per share is remarkable. We would do the math for you to highlight the free cash flow per share, but the SEC rules forbid us from showing this algebra. The company used approximately 80% of 2022 free cash flow to repurchase shares, and the remaining 20% was dedicated to servicing and paying down debt. Through the fourth quarter of 2022, the company has delivered 12 consecutive quarters of positive free cash flow, or approximately $1.6 billion of cumulative free cash flow since Q1 2020. That has enabled the company to retire shares and reduce debt, generating meaningful shareholder value. We believe that the consistent execution of our operational and capital allocation strategies offer an exceptional opportunity for long-term free cash flow per share growth. For 2020 to 2022, the company generated $3 billion of net cash provided by operating activities, which resulted in $1.6 billion in free cash flow, well ahead of our initial expectations set out in 2020. Across the same time period, the company used free cash flows to return $895 million in capital to shareholders and another $674 million to further strengthen the balance sheet. In 2022, the company repurchased 33.4 million shares for $565 million at an average price of $16.92 per share. The company has retired nearly 25% of its outstanding shares since they peaked following the completion of the CNX Midstream Partners merger in 2020, a level matched by fewer than a handful of companies in the S&P 500 and by only 22 companies in the S&P 1500. Furthermore, since 2017 and through January 17, 2023, CNX has repurchased approximately 102 million shares for $1.5 billion, basically at an average price of $14.38 per share. Most importantly, we believe that these shares were repurchased at deeply discounted prices relative to intrinsic value. thereby creating meaningful long-term per share value for our owners. Okay, and this is what the management team's focused on, optimizing long-term per share returns for our shareholders, investing capital exclusively in high return projects, which in turn maximizes both capital allocation flexibility and long-term per share value for shareholders. We strongly believe that a steadfast, relentless commitment to best-in-class safety, environmental compliance, and diversity also increases efficiencies and margins, both important drivers of long-term intrinsic value per share. Efficiently and prudently allocating capital. We focus on systematically earmarking capital dollars to the investment opportunities with the highest risk-adjusted returns, period. Typically insist on minimum internal rates of return of 20% for all capital investments, and our internal projections are based on commodity price assumptions that are at or below the NYMEX strip. Key components of our long-term capital allocation strategy include methodical execution on high IRR exploration and development projects, balance sheet strength to drive capital flexibility, opportunistic share count reduction where we see a significant margin of safety and discount to intrinsic value, strategic control of our midstream assets, which provides operating cost advantages expected to increase cumulative free cash flow in 2023 and beyond, and risk mitigation with a robust hedge book and tiered service contract. Okay, and the third thing, seizing opportunity as a leading Appalachian energy company. Over the next few years, we plan to continue prioritizing the following core initiatives to optimize predictable free cash flow generation, lower costs, a streamlined corporate office that emphasizes on the power of autonomy for business units. Plan to continually reduce costs at headquarters and in our business units, where we seek to maintain a low cost position relative to our peer group. Programmatic hedging. We will continue to follow a robust and programmatic hedging strategy to optimize predictability. Plan to lock in returns by employing a total hedge strategy that hedges both NYMEX and basis and differentiates CNX from its peers. Incentives, compensation programs that align management's interests with those of our shareholders through annual free cash flow per share targets. Our long-term incentive compensation program focuses on share price outperformance, tangible ESG metrics, and directly aligning management's interests with those of our shareholders. Goal of both is to place management in the same shoes as our owners. Growing new technologies. We seek to leverage our unique asset base and core competencies in the development and commercialization of carbon emission reduction opportunities to drive intrinsic per share value growth. Conclusion, and I know there's a lot of reading, right? But I mean, this is the type of long-term investing and strategy and mindset that I want to put forward on this channel. I know it's not going to be the most popular. There's going to be other channels way more popular, but hopefully it's valuable to me and my own returns, but also to you, and hopefully you learn something. And if you appreciate that, then like the video and subscribe to the channel. And check out my email newsletter if you want to go deeper in all of this stuff and join this community of long-term investors that I'm trying to build. This deep long-termism is embedded both in our sustainable business model and in our strategic decision-making. At this juncture, all of the necessary ingredients for our long-term growth and intrinsic value are firmly within our control. From our unique core asset base to our growing new technology opportunities to our balance sheet strength and unique approach to programmatic hedging, we have built a deeply sustainable business model with resiliency throughout any commodity price environment. Our focus in 2023 and beyond will remain on safely and compliantly developing our extensive asset base and on disciplined capital allocation to grow our long-term free cash flow per share. If a disconnect continues to remain between our intrinsic value and our share price, we will act decisively and opportunistically. That's what they're talking about more big buybacks. In other words, we will continue to operate with the mindset of a long-term owner. Stock market is designed to transfer money from the active to the patient, quote by Warren Buffett. Thank you for your investment in CNX and for your trust and partnership. Okay, and here's a couple slides from their Q4 2022 financial results. And that's kind of what they're talking about, right? Q4 free cash flow, $276 million. 2023 estimated free cash flow yield of 13%. 55% Q4 2022 cash operating margin. Expected to be 64% in 2023. 1.7x trailing 12-month leverage ratio. 1.5x expected for next year. Okay, and here's a look at those buybacks. So they've repurchased 57 million shares for $868 million since Q3 2020 at an average price of $15.24. That's what it's all averaged out to. The price right now is $16.21. So far, that was a good repurchase there. At least it was shares were under the current price. They had 224.5 million shares outstanding in Q3 2020, and this shows you how they've bought them back. And so now they're at about 170.1 million, which is a 24% reduction since Q3 2020. CNX has reduced adjusted net debt by 360 million since Q3 2020. So that's pretty cool. They're buying back a bunch of shares and reducing their debt, right? And the reason that this is so important is as the share count gets lower, well, all earnings per share goes up, even without growing earnings. If you're reducing the share count, your earnings per share goes up, your free cash flow per share goes up. And every single company in that Outsiders book by Will Thorndike that just crushed the market, big time share repurchases were a major part of that. And it doesn't necessarily show up from quarter to quarter, but over a long time period, it really starts to add up. Let's do a quick evaluation, right? This is using Everything Money's calculator. And I just use it because it's an easy format to view. I think it's viewer friendly. Where do I get these numbers from, right? I've got revenue growth. This is a 10-year analysis. Revenue growth on the low side, 3%, middle 6%, high 9%. Profit margin 20%, and then 23 on the mid and high. Free cash flow margin, same thing. Price to earnings ratio 5, 8, and 11. Remember, this is 10 years from now. Price to free cash flow 4, 7, and 9, and then a desired annual return of 10, 12, and 15%. As we have higher expectations, we should expect a higher annualized return, right? So the first thing I want to share is where am I getting these numbers from? Well, I'm getting these numbers from what analyst expectations are, and these are not accurate, right? These aren't going to be accurate. They're going to be off, but that's why we're using a span, right? And so analysts are calling for 6% compound annual growth rate of revenue between 2023 and 2026. And then they have a net income margin of 23, 24%, and free cash flow margin is showing 46%. I don't know if that seems really high, so I'm just going with the 23% here to be conservative, right? And so that's where I got those numbers from. And where am I getting the PE and price free cash flow margins from? Well, if we take a look at some of their peers or competitors, this is from Ticker, and I can go in and I can look at kind of like what they call as the competitors, and it's just because they're in the oil and gas and consumable fuels industry. You can see CNX up here. We are looking for market cap to free cash flow. They're at 7.5 right now. And then if you look at Exxon's at 11, Conoco is at 8, BP's at 6, Hess is at 26, Devon is at 8.7, Fang is at 7.4, Marathon is at 5. And then if you look at price to earnings ratio, CNX is at 8, Exxon's at about 11, 9, you got a 6 in here, you got a 20, you got 7, 6, 8, and 6. So what did I do? I put them basically on the conservative side, in my opinion, somewhere right in the middle, and let's see what happens. So we're gonna hit analyze, and what this does not take into account, share reduction. So the result could actually be a lot better than what this is showing because of the reduced share count, right? And again, no guarantees here. Maybe they miss these revenue numbers, maybe the profit margin's worse, maybe they don't trade at a PE of 5, 8, or 11, lower free cash flow, whatever. But what this is showing is if you believe any of this to be true, this stock would be a major, major buy right now. It's at $16.20. And on the low side, we're looking at 42. On the middle, we're looking at 61. And on the high side, we're looking at 71. Okay, I own this stock. I'm obviously biased. Obviously, these are not guarantees. This is not financial advice. But I think it's one that should maybe go on your watch list and you should do some reading of and consider. If you want to know more about it, I am releasing a full research report in my email newsletter. Again, it's linked down in the description below, so sign up and check it out. All right, I want this to be an interactive channel. If you have companies you want me to look up, post them in the comments and let me know. I will do reviews of companies that you request. Have a great day. Thanks for sticking around, and let's popularize long-term quality investing.